Hey guys, welcome to Equity Alpha weekly report for the week of January. This is first week. We will see different indices in a long term, medium term, and short term performances, and also we'll see market breadth for a long term, short term, and advanced decline ratios as well. And also we'll see the Indian macros in terms of FMCG volume growth, GDP growth, and FDI, foreign direct investment. So overall, when we see the whole market structure in terms of indices, market breadth, and macros, it looks mixed. Not completely positive, not completely negative, but it's mixed. So we'll see recent indices performance with major Nifty indices like Nifty 50, Next 50, mid cap, small cap, and micro cap. So from 52-week high, we have seen a minor level of correction to 11% at max. With weekly last week performance, if you can see that it has improved a little bit, but overall on a monthly basis, if you can see, it is still a flattish type of environment in the indexes. When you see a sector performance in the last week, sectors mostly all the sectors have performed well in the large cap sector as well as mid cap and small cap. With heavy weights, you can see banks, software ITs are flat, chemicals is flat, infrastructure diversifiers are flat, but healthcare, automobile, finance, FMCG have performed really well. On a monthly basis, still sectors are struggling. Automobiles, FMCG, capital goods, power, chemicals, they are already under the water. On a larger term view, if you can see, still sectors are performing well. This is the past. There is no guarantee that this kind of performance will continue in the future, but at least what we can see is that we can see the past, what is happening in the current, and we can try to get ourselves comfortable that whether we should proceed forward for investment or a tradings, or what is the current scenario, right? So that is the basic bird eye view we can get from this performance. And we will see FII DII data. So if you can see that last week the FII and mutual funds all are turned bullish. Last 2 weeks they were bearish, and from last 30 days there has been extremely bearishness. More than 85,000 crores from FII and mutual funds have been sold off. So this is the area where we can see that what is happening from the institutional side. So these are the big money, smart money, you can say, and we definitely need to make sure that we can weekly check the progress over here. So that's the FII DII data. Now we can see a market breadth for a short term period. So this is basically a market breadth oscillator, you can see, where it will oscillate from minus 99 to plus 99, 0 being a neutral sign, neutral area. So if you can see over here, our current reading is more than 60. That's comfortable from the neutral area, so that we can see that our short term market breadth is positive. And for a longer term, if you can see, we are still around the neutral, slightly above the neutral. So longer term is also kind of not extremely bullish, we can see, but it's more than neutral. So that's the long-term market breadth. Then we have advanced decline lines, clear downtrend in the advanced decline line, if you can see over here, with declining Nifty and declining advanced decline line. So basically what advanced decline line is, means that we subtract advanced number of stocks that are advances with the number of stocks that are declining, right? And we every day we will get one number, and we are plotting that number, and we are creating a chart from that. So if you can see that there is a clear downtrend in advanced decline, and there is a clear downtrend in the Nifty. So basically what it says that we are already in a downtrend. But if you can see over here, last week we have tried to come out of the water, but it was not possible with the previous attempt. If you can see, advanced decline line climbed up to the previous high, but it just rejected, right? The same way Nifty got rejected. Nifty also has tried to come out of the 24,000. So the actual resistance is over here at this area around 24,800 around, right? So until and unless Nifty comes above 24,800, we are already bullish in the bearish area, right? So that's what we can conclude from the advanced decline line. Now we'll see macros in the industry level macros. If you can see, this is the data coming from Tijori Finance. I'll provide all the sources from where I got those data. So the interesting thing is over here, where if you can see that the tractor sales has been increased from 2.4 to 21, right? So that's a significant amount of increase from September to October, and we are yet to come up with November and December data. But if you can see that from this kind of data, you can definitely analyze that there is something is happening in the tractor sales and tractor related products, right? And it's ancillary products. So that is one area we can watch. Similarly, if you can see that our cement sector, what is actually happening, cement sector is in a declining phase. So you can definitely directly just avoid the cement related stocks, right? And also there is a commercial vehicle retail sales. If you can see, there has been decline significantly. So that is also auto sector stocks you can definitely avoid, basically on a commercial sector. On a demand level, if we can see a GST collection, so there has been a significant growth in the GST collection from 6.5 to 6.9, and now we have 6.5 to 8.9, and we have a 8.5 reading is now. For a net flow equity influence funds, you can see that in September 24 we had 1.144 to 109, and now it has been increasing. So that is a sign of a positiveness. You can see on a GDP and trade basis, obviously our GDP is getting shrinked, right? Contracted with recent months. If you can see that the readings are 7.8 to 6.7 to 5.4, that is a sign of worry. You can see that. And the most interesting thing in this macro is that volume growth of the FMCG companies. If you can see, the volume growth was increased in June by 5.4%. Now it is already in 2.9%, and that is the reason. If you can see, the FMCG sector and FMCG stocks, they are having a huge correction of almost around 10 to 20%. In almost most of the stocks are having a bad performance because of this volume growth. Now we can see a market mood index. So this is the basically index provided by ticker tab, where it actually shows the overall sentiment of the market participants. And we usually buy when the market mood index is in extreme fear or a fear. We just avoid greed and extreme greed areas, unless if we want to have a quick swing trading, that's possible. But for investment, we usually follow extreme fear and fear areas, where participants are in extreme fear for crash. There we usually find the value in the stocks. And if you have any questions, you can definitely raise your questions in YouTube channel or a Telegram. And we'll see stocks now and the sector performance from the chart basically. Okay, so this is Nifty chart, Nifty index. If you can you can see that Basically Nifty has made a top at 26,324, and then it has corrected almost, I think it's a 10% correction, 10 to 11% correction. Then it has just rallied back to previous high at 24,896, and then it has corrected and took support from 200 moving average. And if you can see this line is anchor VWAP volume weighted averages. So basically what it does is it it includes the volume as well as price factor. So it creates a support and resistance area. So if you can see that from the top, the anchor VWAP is exactly coming over here, and stocks are getting resistance, right? So index is getting resistance. The same way index is also getting support from here. So basically what we can conclude over here is that if the index does not sustain above 24,440 for at least 1 week, we are already under the water. I mean, the major index is already under the water, and there is a probability of the continuation of the ABCD pattern, and the projection can come around 21,800. So already if we can see, we are corrected for almost 10%, and now we can correct another 9 to 10%. And if you can see your portfolio with 10% correction, how much it can hurt, right? So we just need to plan accordingly, right? So the same way we can see the overall CNX 500, that's a Nifty 500, small cap, mid cap and large cap. Overall they are beautifully taking support from the 200 lines, and also taking, just testing the support at the 50 moving averages. In the same way Nifty Junior, if we can see, it is yet to break out from those convergence areas. So this is the convergence area basically. So where important moving averages and prices are conjunct together, that is called convergence area. That are very important areas where reversals may occur, right? We can see a mid cap. So mid cap is actually getting resistance, sorry, support over here at a 50 moving averages. We can create a trend line as well. So, and also you can see 200 moving average is already on a rising level. So that is basically, you can see that the mid cap is already diverging from the Nifty basically. So Nifty is getting downtrend, but mid cap is actually having a uptrend, medium term uptrend, you can say. On a small trend, small cap, you can see that that is also performing well as compared to Nifty, and mid cap is also performing well. Now we will see stocks basically. So this morning I have suggested few stocks. Those were definitely not a recommendation, but that was for learning purpose. And we can see that for the ITI, Indian Telephone Industries Limited, we have broken a resistance with huge institutional volumes, and that's the entry area, and we can put a 8% stop loss and we can ride. And the projection, how I come with this projection is that whenever we have breakouts like this occur through a rounding bottom, whatever depth the stock has covered, that depth can be projected over here. So that's the area. So that is the reason we got the 84% projection. Obviously not 100% surety, it's a probability that it can go over there. Another stock we can see is that Kingfa Sci-Tech. So this stock is also having a clear breakout, you can see. And the important thing is that the volume spike, if you can see the volume spike, it's clearly indicating institutional entries, right? So there is a elephant in the room, you can say, and it cannot move without making a noise, right? So we usually track these kind of institutional entries with those volume spike. So if you can see that there is volume spike over here with 49,000, 74,000, and we have a 199,000 of a volume, right? So also the same way the depth projected over here, so projection is almost around 30%. Fundamentals, you can see earnings are increasing, sales is increasing, that's it. We can also see a margin. So basically I personally focus on earnings, sales and margin, that's it. Over here you can see that this is the weekly chart and this is a daily chart. There is also has given a breakout, right, and with volume. Another chart is Lloyd metals and energy. Basically it has just blasted after taking support and the breakout, and we usually I mean this is the best entry over here, right? If we miss this entry then definitely there is no point catching up the move. Sometimes what happens is that it just reverses very sharply and cuts your stop loss. So that's always better. It's always better if you stay away from such moves, in case if you did not take an entry or you have missed the entry. Another stock is the Jubilant Ingravia. A huge bottom or a rounding bottom, I would say, if you can see on a weekly basis. And if you project almost 130% is the projection over here. So definitely it will take some time to give those projection related performance, but yeah, it's a kind of a bullish thing. And if you can see over here in this area, the institutional entries like 10 million shares, 14 million shares, 8.9 million shares. So these are the institutional entries. They have taken entry over here in this area, right? And we are over here. So basically we can take a few quantity of the share and see, let's say if it performs, then we can definitely continue further adding pyramiding the stock. Another one is Gland Pharma. So Gland Pharma basically is a stage 4 downtrend. Over here is a stage 1 accumulation area, you can see, but still it has broken out from the resistance, but it is not confirmed by the volume. So we will make it put it as a potential candidate for the stock picking area. But since the volume has not come, institutional entries has not confirmed, we will not jump into this stock, but instead we will just measure the stock and we will just look at the stocks for institutional entries. Institutions have already entered over here, but we need more and more volumes towers that confirms the probability and increase the probability of our success. Another one is KIMS hospital, Krishna Institute of Medical Science Hospital, where we can see that there has been a selling over here. Institutions are getting out, right? But with recently we can see a spike over here, and also in I think September 2024 we had a spike for 3.7 million quantity, right? So institutions are already there. It's not like that they have just get out, but we just need to make sure that there has been selling. So we should be cautious over here, but this is also already a trending stock. We can definitely look further into this. And then we have a Blue Star, clear cut, you can see reverse head and shoulder, also cup with handle if you consider over here, right? So that's the breakout area. Usually we do not enter after more than 5% increase from the breakout area. We usually try to enter over here, have some gains and then ride another rally, right? So we have fundamental is also great. And another important thing, confirmation, volume confirmation is also there from 1 2 3 4 5 days. On an average 4 days are having more than double volume, average double of the average, right? And even in a weekly chart, if you can see over here, it has clearly broken out on a weekly basis. So that's a very clear sign of a breakout with elephant in the room, right? So we can definitely ride this stock. The last one in our list today is Jubilant Foodworks. Basically it has just having a very bad year, in terms of performance, I would say. So stock has been consolidating since last 2 3 years, and it has now having a huge spike up, but still volume confirmation is not there, so we will be just watching this. We'll wait for the volumes, heavy volumes to come, and then only we will enter, otherwise we will not enter. Even fundamentals is having kind of some kind of issues over here, they are degrading, right? But we never know, 1 or 2 quarters can, can just change the game, right? But overall the stock has consolidated a lot. Once the institutions get enter, we can definitely enter and ride the stock. So for now, I think, guys, that's it. We'll see uh, next week with more ideas like this, and sector performance as well as weekly indices performance, and we'll see how we can proceed further for new ideas. And I am planning to live trade very soon, and we'll see how we can proceed, and we'll also try to make sure how I position size my entries, how I how I take risk, and how I manage the risk. That is very important. So the first step is to analyze the sector, another step is to find the niche stocks related to the performing sector, and once the sector and stocks are picked, we can just position size ourselves, that how much risk we want to take and how much capital we want to deploy. Once the capital is deployed, we'll try to make sure it perform. If it doesn't perform, we'll definitely go out of the stock, and if it performs, we'll try to allocate more capital, and we'll try to manage our risk. Yeah, so that's it from my side. We'll see you next week. Yeah, thank you.